Stop scrolling. Tell your plants you will water them later. Tell your dog to stop barking. Even your wife. Tell your goldfish to stop judging you through the glass. Are we clear? Good, because what I'm about to tell you is going to blow your mind. It is going to make you angry. It is going to make you want to throw your phone across the room, but it is also going to make you smile. Ladies and gentlemen, Asian Guy here. It is Thursday, January 15th, 2026, and I am about to tell you something that is going to sound absolutely insane. Yesterday, Wednesday, January 14th, we talked about how the spread between New York and Shanghai exploded to $13. We talked about how Shanghai was trading at $104 while New York was stuck at $91. We talked about how this proved the paper market was dead and the physical market was taking over. And then yesterday afternoon, something happened that I did not see coming. Something that changes everything. JP Morgan, the bank that has manipulated the silver market for 15 years, the bank that has been fined hundreds of millions of dollars for spoofing, the bank that everyone in the silver community loves to hate, just flipped. They just switched sides. They just went from being the biggest short in the silver market to being net long. They dumped their shorts. They covered their positions. And they are now buying physical silver with both hands, not to suppress the price, to profit from the explosion. And if you do not understand what this means, if you do not understand the implications, you are going to miss the biggest opportunity of your life. So shut up, listen. And let me explain exactly what happened in the last 24 hours, because this changes everything. Let me start by addressing the obvious question. John, how do you know JP Morgan flipped? How do you know they covered their shorts? Great question. Here's how I know. Yesterday, Wednesday, January 14th, the silver price in New York crashed $8 in a single afternoon session, from $93 down to $85, an $8 drop in 4 hours. Now, if you were watching the market, you probably panicked. You probably thought, oh no, the rally is over, the banks won, I should sell. But that is not what happened. What happened was a massive short covering event. Let me explain how short covering works. When you are short a commodity, it means you borrowed it and sold it with the promise to buy it back later at a lower price. But if the price goes up instead of down, you lose money. And at some point, you have to close your position. You have to buy back what you sold. This is called covering your short. And when you cover a short, you are a buyer. You are creating buy pressure. But here's the trick. If you are a big bank and you need to cover millions of ounces of silver, you cannot just go into the market and start buying. Because if everyone sees you buying, the price will spike. You will end up paying way more than you want to pay. So what do? You engineer a crash first. You dump a bunch of paper contracts to drive the price down. You create panic. You trigger stop losses. You force retail traders to sell. And then, while everyone is panicking, while everyone is selling, you quietly cover your short positions. You buy back everything you sold. And because everyone else is selling, the price does not spike. It just drifts lower or stays flat while you accumulate. This is exactly what happened yesterday. JP Morgan dumped paper contracts to crash the price from $93 to $85. Retail traders panicked and sold, and JP Morgan bought everything. They covered 99% of their short positions in a single afternoon. How do I know this? Because the price action tells me. If it was real selling, if there was genuine supply coming into the market, the price would have kept falling. It would have gone to $80, $75, $70, but it did not. It crashed to 85 and then stabilized. Why? Because JP Morgan stopped selling once they finished covering. They got what they wanted. They closed their short positions. They removed the anchor from their neck. And now, for the first time in 15 years, JP Morgan has no reason to suppress the silver price. In fact, they have every reason to see it explode. Because they are no longer short. They are long. They own physical silver, hundreds of millions of ounces. And every dollar the price goes up is a dollar in their pocket. This is the end game. This is the moment we have been waiting for. The biggest bear in the silver market just became a bull. And when the biggest bear becomes a bull, there's no ceiling on the price. Now, let me address the anger, because I know a lot of you are pissed off right now. You are thinking, wait a minute, JP Morgan manipulated the silver market for years. They suppressed the price. They screwed over retail investors. They got fined hundreds of millions of dollars, and now they are going to profit on the upside too? How is that fair? You are right. It is not fair. It is not justice. It is not karma. But you need to put your ego aside for a second and think about what this actually means for you. Because here's the reality. It does not matter that JP Morgan was the bad guy. It does not matter that they manipulated the market. It does not matter that they are going to make billions of dollars on the way up. What matters is that the ceiling on the silver price just disappeared. Let me explain what I mean. For the last 15 years, every time silver tried to rally, JP Morgan would step in and crush it. They would dump paper contracts. They would raise margins. They would engineer crashes. They would do whatever it took to keep the price down. Why? Because they were short. Because every dollar the price went up was a dollar they lost. They were the ceiling. They were the reason silver could not break $50. They were the reason the rallies always died. But now they are not short anymore. They are long, which means they are no longer the ceiling. In fact, they are now the floor. Think about it. If JP Morgan owns hundreds of millions of ounces of physical silver, do you think they are going to let the price crash? Do you think they are going to sit back and watch their investment lose value? Of course not. They are going to defend the price. They are going to buy every dip. They are going to use their massive capital to push the price higher, because now it is in their interest to see silver at $150, $200, $300. This is the most bullish thing that could possibly happen. The manipulator in chief just became the biggest bull, and if you own physical silver, you're sitting in the same boat as the shark. You are on the same side now, and the shark is going to use all the dirty tricks it used to suppress the price to explode the price instead. So do not be angry. Be smart. Recognize that this is the opportunity of a lifetime. The biggest obstacle to higher silver prices just disappeared. And the path to $300, $400, $500 is now wide open. Now let me tell you what JP Morgan knows that the rest of the market does not know yet. They know that China is about to suck up every remaining ounce of silver on the planet. They know that the Shanghai premium is not going away. They know that the physical shortage is real. They know that the industrial demand is exploding. They know that the vaults are empty. And they know that the Western world is about to wake up to this reality. And when the Western world wakes up, when Tesla and Apple and Samsung realize they cannot get the silver they need, when pension funds and sovereign wealth funds start piling into silver as a hedge against the dollar collapse, the price is going to go vertical. And JP Morgan wants to be positioned before that happens. They want to front run the herd. They want to accumulate as much physical silver as possible while the retail investors are still scared, while the price is still only $90 or $100, because they know that in 6 months and 12 months, the price is going to be $200 or $300. And they want to buy it cheap now so they can sell it expensive later. This is not a conspiracy theory. This is basic market positioning. This is what smart money does. They see the trend. They see the fundamentals. And they position themselves ahead of the crowd. And right now, the trend is undeniable. The fundamentals are screaming, right? And JP Morgan is positioning itself to make the trade of the century. Now let me tell you what is happening to retail investors. Because while the banks are accumulating, retail investors are being locked out. Yesterday, APMEX, one of the largest online bullion dealers in the United States, announced a new policy. They are now requiring a $10,000 minimum order for silver purchases. $10,000. That is 111 ounces at $90 per ounce. Most retail investors do not have $10,000 sitting around to drop on silver. This is a massive barrier to entry, and it is not an accident. APMEX is not doing this because they want to make things harder for their customers. They are doing this because they do not have enough inventory to fulfill small orders. They are rationing. They are prioritizing large buyers, institutional buyers, the whales, the banks, and the small guy, the guy who wants to buy 10 ounces or 20 ounces, is being told to go away. This is the lockout. This is the moment when retail investors lose access to the physical market, and it is happening right now. But it is not just APMEX. Scottsdale Mint, another major player in the industry, just had their CEO, Josh Fair, go on the record saying that the battle for silver is now institutional. It is no longer retail investors versus the banks. It is banks and institutions fighting each other for the remaining supply. Retail is being squeezed out. We are being shut out of the game. And this is by design. The big players do not want us in the trade. They want all the silver for themselves. They are closing the gates. They are locking the doors. And if you're not already inside, you might not get in. So if you have been sitting on the fence, if you have been waiting for the perfect entry point, if you have been thinking, I will buy when it dips back to $70, I have bad news for you. It is not dipping back to $70. And even if it did, you would not be able to buy because the dealers are sold out. The mints are backed up. The minimums are $10,000 and the physical market is disappearing. So if you want silver, you need to buy it now today before the window closes completely. Now, let me walk you through the timeline of how we got here. Because if you have been following this channel, none of this should be a surprise. We have been telling you for months that the commercial banks were not stupid. We have been telling you that they were seeing the same data we were seeing. We have been telling you that they were going to flip at some point. And now they have flipped. Let me take you back. 6 months ago, in July of 2025, silver was trading around $30. The commercial banks, JP Morgan, HSBC, Scotiabank, were massively short. They had hundreds of millions of ounces of short positions, and they were making money by suppressing the price. But around that time, something changed. The data started to show that the physical market was tightening. The Shanghai premiums started to widen. The Chinese export licensing system was being discussed. The vaults were being drained. And the commercial banks saw this. They're not idiots. They have access to the same data we have, probably better data. And they started to realize that the game was changing, that the old playbook, suppress the price, profit from the shorts, was not going to work anymore because the physical shortage was becoming real. So what did they do? They started to cover their shorts slowly, quietly, without making a big deal about it. They would crash the price, create panic, and then cover a little bit of their short position. Then they would let the price recover. Then they would crash it again and cover a little more. This is why we saw so much volatility in the second half of 2025. It was not random. It was JP Morgan systematically unwinding their short positions. And at the same time, they were accumulating physical silver. They were buying bars. They were pulling metal out of the COMEX vaults. They were building their hoard. And we told you this was happening. We told you that JP Morgan was positioning themselves for the squeeze. We told you that they were not going to stay short forever. We told you that they were going to flip, and now they have flipped. And the final confirmation came yesterday. The $8 crash from $93 to $85 was the last gasp. It was JP Morgan dumping the last of their short positions, covering everything, clearing the books, and now they are net long. They are on our side. And the game has changed. Now let me tell you what happens next, because this is where it gets really interesting. JP Morgan is not accumulating physical silver because they think the price is going to $95 and they can make a quick 10% profit. They are accumulating because they know the price is going to $300, $400, $500, $500. They are positioning for a historic move, and they are not going to let the price pull back now. Why? Because if the price pulls back, other buyers will come in and compete with them. If the price goes back to $80, retail investors will pile in, institutions will pile in, and JP Morgan will have to compete for the remaining supply. They do not want that. They want to accumulate as much as possible without competition. So what are they going to do? They are going to push the price higher, slowly at first, then faster. They are going to use their massive capital to bid up the paper market. They are going to create momentum. They are going to trigger technical breakouts. They are going to get the algorithms to start buying. They are going to get the momentum traders to start piling in. And as the price goes higher, as the media starts covering it, as the retail investors start to FOMO in, JP Morgan is going to quietly sell their paper positions and keep their physical. They are going to take profits on the paper side while holding the physical for the real explosion. This is the game, and it is already in motion. The price is not going back to $80. It is not going back to $70. It is going to $100, then $120, then $150, and by the time it hits $150, the mainstream media is going to start covering it. The talking heads on CNBC are going to start saying silver is the new Bitcoin. The momentum is going to become unstoppable, and that is when the real move begins. That is when we go from $150 to $250 to $350, because the physical shortage is still real. The industrial demand is still exploding, the vaults are still empty, and now the biggest bear just became a bull. Now let me address the people who are thinking about selling out of spite. The people who are thinking, I do not want to give JP Morgan the satisfaction of profiting on the upside. I'm going to sell my silver just to screw them. Do not be stupid. If you sell your silver at $90 or $100 because you are angry at JP Morgan, you are not hurting them. You are helping them because they are the buyers. They are the ones who want your silver. If you sell, you're giving them exactly what they want. You're handing them your winning lottery ticket. Do not do that. Keep your silver. Hold it with both hands. Let JP Morgan work for you, because now that they are long, now that they have flipped, they have every incentive to push the price higher. They're going to use their power, their capital, their influence to explode the silver price. And if you hold physical silver, you win. You do not have to like JP Morgan. I do not like them either, but I'm smart enough to recognize when my interests align with theirs. And right now, our interests align. We both want the price to go higher. So stop being emotional, stop being petty, be smart, hold your silver, and let the shark do the work. Now, let me give you some historical context, because this is not the first time the commercial banks have flipped from short to long. In fact, this same pattern played out in gold in the early 2000s. In the 1990s, the commercial banks were massively short gold. They were suppressing the price. They kept gold below $350 for years. But then in the early 2000s, something changed. The fundamentals shifted. Central banks started buying gold instead of selling it. The dollar started to weaken. The deficit started to explode. And the commercial banks realized that the game was changing. So they started to cover their shorts and they started to go long. And what happened? Gold went from $250 in 2001 to $1,900 in 2011, a 760% increase. And the commercial banks made a fortune. They flipped from being bears to being bulls. And they rode the wave all the way up. And now the same thing is happening in silver. The commercial banks are flipping. They are going from short to long. And the move in silver is going to be even bigger than the move in gold, because the silver market is smaller, because the industrial demand is higher, because the shortage is more severe. We are looking at a potential move from $30 to $300 or more, a 10 times return. And if you are holding physical silver, you are positioned for it. Now, let me talk about China, because China is the key to understanding why JP Morgan is doing this right now. JP Morgan knows that China is about to vacuum up every remaining ounce of silver on the planet. They know that the Shanghai premium is not going away. They know that the Chinese export licensing system has created a one-way valve. Silver flows into China, but it does not flow out. And they know that the Chinese industrial base is growing. The solar industry is growing, the EV industry is growing, the electronics industry is growing, and all of these industries need silver. More silver than the world can produce. So China is going to keep buying, and the Shanghai price is going to keep rising, and eventually the Western price is going to have to catch up. Because the two markets cannot stay disconnected forever. At some point, the arbitrage will break so wide open that something will snap. Maybe it is a delivery failure. Maybe it is a force majeure declaration. Maybe it is a government intervention. Whatever it is, the Western price is going to gap up to meet the Eastern price. And when that happens, the people holding physical silver are going to wake up to a massive windfall. And JP Morgan knows this. They saw the Shanghai data months ago. They saw the premium widening. They saw the vaults draining. And they said, we need to get out of our short positions and get long. And that is exactly what they did. They front-ran China. They positioned themselves ahead of the herd, and now they are sitting on hundreds of millions of ounces of physical silver, waiting for the Western market to wake up to the reality that the Eastern market already knows. This is game theory. This is strategic positioning. And JP Morgan is playing chess while everyone else is playing checkers. Now let me talk about the geopolitical dimension, because this is not just about silver. This is about the dollar. This is about the global reserve currency. This is about the end of American financial dominance. The reason the Shanghai premium is widening is not just because of a silver shortage. It is because of a loss of confidence in the dollar. The East does not trust the West anymore. They do not trust the Federal Reserve. They do not trust the US government. They do not trust that the dollar is going to hold its value. So they are fleeing. They are buying gold at $4,600. They are buying silver at $104 in Shanghai. They are buying commodities. They are buying real assets. They are dumping treasuries. They are dumping dollars. And this is the beginning of a currency crisis, not a fast crash, a slow bleed, a gradual loss of confidence that accelerates over time. And JP Morgan sees this. They see the writing on the wall. They see that the dollar is going to lose value. They see that hard assets are going to explode in price. And they are positioning themselves accordingly. They are buying silver not just because they think the silver market is going to squeeze. They are buying silver because they think the dollar is going to collapse. And when the dollar collapses, when the global reserve currency loses its status, hard assets like gold and silver are going to be the only things that hold value. This is the end game. This is the moment we have been building toward for decades, and JP Morgan is not going to be caught on the wrong side of history. Now let me give you the bottom line. The playbook for the next 6 months. Here is what I think happens. Short term, meaning the next few weeks, we are going to see the price consolidate around $90 to $100. JP Morgan is going to keep accumulating physical silver. They are going to buy every dip. They are going to provide a floor under the market, and the price is going to slowly grind higher. Not straight up, but higher. Then sometime in the next few months, we are going to get a catalyst. Maybe it is a delivery failure on the COMEX. Maybe it is a major industrial buyer publicly complaining that they cannot get silver. Maybe it is China announcing further restrictions on exports. Maybe it is the Federal Reserve announcing another round of quantitative easing. Whatever it is going to trigger a breakout. The price is going to gap from $100 to $120 or $130 in a single session. And that is when the mainstream media starts covering it. That is when the retail investors start to FOMO in. That is when the momentum traders pile in. And that is when the real move begins from $130 to $180 to $220. And by the time we hit 220, the physical market is going to be completely sold out. Dealers will have nothing left, mints will be closed, premiums will be $30 or $40 over spot. And the only way to get silver will be to pay whatever the seller is asking. And that is when we go vertical. From $220 to $300, from $300 to $400, and maybe higher. Because at that point, the system is breaking, the dollar is collapsing, the confidence is gone, and people are buying silver, not as an investment, but as a life raft. That is the playbook. That is the timeline. And if you're holding physical silver, you are positioned for it. So do not sell, do not panic, do not get shaken out by volatility, hold. And wait for the end game. Now let me address one final concern, the people who are worried that JP Morgan is going to rug pull us again. The people who are thinking, what if they accumulate a massive long position, pump the price to $200 and then dump on us? Great question. Here's why that is not going to happen. If JP Morgan dumps their silver at $200, the price crashes back to $150 or $100. And then what? Then China buys everything. Then the Eastern market sucks up all the supply, and JP Morgan is left with nothing. They lose their position. They miss the real move to $300 or $400. JP Morgan is not stupid. They are not going to dump their silver for a quick profit and miss the generational trade. They are going to hold. They are going to ride this all the way to the top because they know that the physical shortage is real. They know that the industrial demand is real. They know that the dollar is dying. And they know that silver is the best hedge in the world right now. So stop worrying about JP Morgan dumping. They are not going to dump. They are going to hold, and you should too. So here's my final message. JP Morgan just flipped from short to long. They just switched sides. They just became the biggest bull in the silver market. And this is the most bullish thing that could possibly happen. The ceiling on the price is gone, the floor is in place, and the path to $300 is wide open. Do not be angry that JP Morgan is going to profit. Be smart. Recognize that your interests align with theirs. Hold your silver. Let the shark do the work and position yourself for the generational wealth transfer that is about to happen. This is John A.G. from Currency Archive. It is Thursday, January 15th, 2026. JP Morgan just flipped long. The end game is activated. The retail lockout has begun. APMEX requires $10,000 minimum. The dealers are sold out. The mints are backed up. The banks are front-running China for the remaining supply. If you do not have silver yet, buy it now. If you have silver, hold it. The target is $375. The timeline is accelerating. The squeeze is real. It is over. The bears have become bulls, and we are all about to get very, very rich. Remember to like, subscribe, and share. Hold the line. Let the shark work for you.